Imagine this: you're standing in the sleek, modern lobby of a major American bank, the air cool and smelling faintly of disinfectant and money, a place you've been to 100 times for mundane tasks like depositing checks or withdrawing cash for a weekend trip. But today is different. Today, your heart is pounding a frantic rhythm against your ribs because tucked securely in your inner jacket pocket is not a familiar greenback, but a vibrant, ornate, and to most people here, utterly alien piece of paper, a 25,000 Iraqi dinar note. You approach the counter, your palms slightly damp, and you slide the note across the smooth, cold marble to the teller. You brace for the inevitable confusion, the furrowed brow, the call for a manager, the polite but firm rejection you've been conditioned to expect for over a decade. But it never comes. Instead, the teller offers a professional smile, takes the note, scans it into a system, and a few clicks later, confirms the transaction, converting the dinar's value at that day's official rate directly into US dollars and crediting your account. This scene, which for years has existed only in the most hopeful corners of online forums and the most ambitious sales pitches from currency dealers, is no longer a pure fantasy. It is a nascent, complex, and critically misunderstood reality beginning to take shape in the corridors of global finance, and if you are one of the countless individuals who has invested in the Iraqi dinar, what you are about to learn will fundamentally reshape your understanding of what your investment actually is, what this new development truly means, and the monumental gap that still exists between a bank processing a financial instrument and a full-fledged revaluation that creates millionaires overnight. The whispers are true, but the details are everything, and the devil, as they say, is in those details. The key to unlocking this puzzle lies not in wishful thinking but in comprehending the dry, technical, yet utterly revolutionary concept of correspondent banking, a system that acts as the financial plumbing of the global economy, and Iraq has just been granted a significant, hard-won connection to that plumbing after years of being isolated. This isn't a story about the value of the dinar suddenly skyrocketing. This is a story about the dinar finally being allowed to sit at the adults' table in the global financial system, and that invitation comes with a strict set of rules, immense scrutiny, and a purpose that has very little to do with the speculative dreams of foreign holders. The journey from your safe to a recognized asset is a long and winding road, and we have just passed a major checkpoint, but the destination remains on the horizon. So, take a deep breath, push aside all the hype and anxiety, and let's embark on a clear-eyed, data-driven exploration of what it actually means when we hear that US banks are now accepting the 25,000 Iraqi dinar note, because the real story is far more interesting and strategically important for your investment than any simplified headline could ever convey. This shift is not an accident, nor is it a sudden act of charity from Western financial institutions. It is the direct result of a multi-year, grueling campaign by the Central Bank of Iraq to drag its national financial system out of the shadows and into the blinding light of international compliance. For the better part of 2 decades, following the 2003 invasion and the subsequent turmoil, Iraq operated as a financial pariah, its banks largely cut off from the rest of the world due to overwhelming concerns about money laundering, terrorism financing, and a sheer lack of transparent governance. Moving money in and out of Iraq was a labyrinthine process, often relying on informal hawala networks or a handful of intermediary banks willing to take on the colossal risk. This isolation was the very petri dish in which dinar speculation flourished. It was an unregulated, opaque market where hope could be sold as convincing. The U.S. bank, now confident that the Iraqi bank is following international rules and that the transaction is legitimate, executes the order. In this intricate, digital, behind-the-scenes dance, the 25,000 dinar note is the standard unit of account for large transfers within Iraq. Its acceptance refers to its role as the recognized currency for settling these multi-million-dollar interbank transactions, not your local teller cashing a single note for you. This is a monumental leap for Iraq's economic sovereignty, but it is a wholesale, institutional process, a world away from the retail currency exchange you might be picturing. The data confirms this seismic shift. The volume of transactions processed through the Central Bank of Iraq's foreign currency auction has stabilized and become more transparent, and the daily financial statements now show a consistent and legitimate flow of funds through these new, approved channels. This is the foundation being laid, the installation of the financial infrastructure necessary for a modern economy to function and, potentially, for a future revaluation to be logistically feasible without causing total systemic collapse. So, with this foundational understanding that the acceptance of the dinar is currently a sophisticated interbank phenomenon and not yet a retail reality, we must now confront the most pressing question on every holder's mind. What does this actually mean for the tangible value of the stack of 25,000 dinar notes sitting in my possession? The implications are profound, multi-layered, and operate on two parallel tracks, one of soaring potential and one of sobering, pragmatic limitation. On the track of potential, this development injects a dose of legitimate, verifiable credibility into the Iraqi dinar that it has never possessed in the modern era. When a Tier 1 U.S. financial institution, operating under the microscopic scrutiny of the Federal Reserve, the Office of the Comptroller of the Currency, and a host of other regulatory bodies, agrees to process transactions denominated in IQD, it sends an unequivocal signal to the entire global financial community that Iraq is no longer a complete economic black hole. This legitimacy is the absolute bedrock upon which any future confidence must be built. It is the prerequisite for attracting serious foreign investment beyond the oil sector, for fostering international trade, and for eventually having the Iraqi dinar be viewed as something other than a purely speculative token. Think of it as a credit score for a nation's currency. For years, Iraq's score was abysmally low, and no reputable institution would touch its money. Now, through painful reform and compliance, that score is slowly, painstakingly improving, and doors that were once welded shut are now beginning to creak open. This newfound legitimacy directly impacts your investment by creating a more stable and transparent environment for the currency to exist within, which is a far cry from the chaotic, unregulated gray market of the past. Furthermore, and this is a critical strategic point, the establishment of these correspondent banking channels is the very logistical framework that would be absolutely mandatory for any future large-scale revaluation to be practically possible. Let's engage in a thought experiment. Suppose the Central Bank of Iraq announced tomorrow that the dinar would be revalued to a rate of 1-to-1 with the dollar. Without the pre-existing, tested, and robust network of correspondent banks, the global financial system would experience a catastrophic seizure. The sheer volume of conversion requests, the trillions of dollars in new nominal value flooding into a system with no pipes to handle it, would create instant gridlock and likely trigger a hyperinflationary spiral within Iraq itself. The existence of these operational relationships means the necessary plumbing is now installed, pressure tested, and ready to be used at a much higher capacity. It removes a primary technical obstacle that has long been a theoretical barrier to a significant revaluation. However, and this is where we must switch to the track of sobering reality, this same infrastructure also grants the Central Bank of Iraq and its international partners, particularly the U.S. Federal Reserve, an unprecedented level of oversight and control over the flow of dinar in and out of the country. They can now monitor for speculative attacks, track the movement of large blocks of currency held by foreign entities, and ensure that any future change in value is a managed, orderly process dictated. The data you should be monitoring has consequently shifted. It is no longer the frantic posts on Dinar Guru forums but the dry, quarterly reports from the International Monetary Fund on Iraq's economic progress, the monthly statements from the CBI on its foreign currency reserves, and the official announcements regarding the nation's budget surplus from its oil revenues. These are the new vital signs of your investment, and they are telling a story of slow, challenging, but tangible progress. Therefore, we arrive at the present moment, a critical juncture defined not by the culmination of the dinar journey but by its most complex and strategically delicate phase yet. The narrative that U.S. banks are now processing the Iraqi dinar is a factual milestone, but its interpretation has been dangerously oversimplified in the echo chambers of speculative investment, often stripped of its crucial context and caveats to serve agendas that may not align with your long-term financial well-being. The cold, hard, data-driven reality we must now confront is that the Iraqi dinar remains, by any objective financial measure, a high-risk, speculative asset whose ultimate fate is inextricably tied to a multitude of geopolitical and macroeconomic factors that extend far beyond the balance sheets of correspondent banks. The successful integration into the global banking system is a necessary condition for your investment to ever realize its potential, but it is nowhere near a sufficient one. The sufficient conditions include a list of Herculean challenges that Iraq is still grappling with, the final passage and, more importantly, the effective implementation of a national hydrocarbon law that fairly and transparently distributes the nation's immense oil wealth among its diverse population, a political feat that has been elusive for decades. It requires the permanent dismantling of the vast, entrenched networks of corruption that have siphoned billions of dollars away from public infrastructure, healthcare, and education, effectively acting as a constant brake on the country's economic growth and stability. It demands the continued political stabilization of the federal government in Baghdad and its relationship with the autonomous Kurdistan region, ensuring a unified economic policy that can inspire confidence in international markets. And ultimately, it hinges on a deliberate, calculated decision by the Central Bank of Iraq to revalue its currency, a monumental policy move that would be taken only after careful consideration of its impact on domestic inflation, the cost of imports, the repayment of national debt, and the overall purchasing power of every single Iraqi citizen. Your investment, when you boil it down to its essence, is not merely a bet on a piece of paper. It is a strategic wager on the entire future trajectory of the Iraqi state, its political will, its institutional integrity, and its ability to navigate a path to sustainable prosperity in a volatile region. The 25,000 dinar note you hold is a token representing a share in that audacious future. The recent banking developments mean that the vehicle for this investment has been deemed roadworthy and allowed to enter the highway of global finance. It does not mean it has a clear lane or a guaranteed destination. The risks have not magically evaporated with this news, they have simply evolved, transforming from the total risk of a worthless asset to the more nuanced risks of stagnation, of agonizingly slow growth, or of a revaluation that is so modest and managed that it fails to meet the decade-inflated expectations of many holders. This is the new landscape of your investment, one that requires more patience and sophisticated analysis than ever before. The most intelligent and proactive step you can take now is to fundamentally shift your sources of information, moving away from the speculative fervor of online forums and instead tuning your attention to the primary sources that move the real levers of power, the official statements from the Central Bank of Iraq, the detailed country reports published by the International Monetary Fund and the World Bank, and credible financial news agencies that cover Middle Eastern economics with a critical, unbiased eye. The true signal of a fundamental shift will not be a rumor from a bank insider, but a headline about a finalized oil law, a quarterly report showing a dramatic and sustained increase in non-oil exports, or a public commitment from the CBI to a new monetary policy framework aimed explicitly at strengthening the dinar's value to combat inflation and encourage domestic investment. This is the level of analysis that your investment now demands and deserves. The emotional role. The passage of a specific article of the hydrocarbon law. Share your focus. Your perspective is invaluable, and by sharing it, you help create a repository of intelligent watch points for everyone here. Let's crowdsource our vigilance. If this deep, nuanced dive cut through the noise for you and provided a realistic, structured framework for understanding this complex situation, then please do this channel a tremendous favor. Hit that like button with conviction. It is the most direct signal to YouTube that this type of serious, long-form content is valuable and should be shared with other serious holders who are tired of the hype. And most importantly, subscribe and tap that notification bell, because as this story enters its most critical and fast-moving phase, we will be here to provide the same level of calm, data-driven analysis, breaking down every significant development without the sensationalism and with your long-term financial interests as our guiding principle. The final chapters of the Dinar story are being written now in the meeting rooms of Baghdad, the halls of the IMF, and the compliance departments of international banks. Let's make sure we are all reading from the same, accurate page.